Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey everybody, welcome to the Laughing Stock. Redneck Johnny here. A bit of a crazy day today in the market, and in the title you can see that I put like a market goes down and market goes up, and today we have a lot of moves. I saw a lot of things in the daily movers as well, so I've found a couple of new tickers already, but I've also pulled in some from my tracker sheet because I've seen some development in some of the stuff that I've been tracking, and I'm planning to go through a few of them today as well. But also I want to, if we have time, to try out a few other screeners than just the daily movers, and see if I can find anything interesting there. There's been a few ones also lately in the past 2 weeks that has looked a little bit interesting, and yeah, we keep on looking for new things and new tickers, and hopefully we can add some to the tracker today as well. As always, I need to just quickly go through if I can see some new tickers in the daily movers, because I pulled them in like 1 hour ago, so I just want to update that. But first, we are here in the dashboard, and as you can see, there's a lot of color. And on Dane's stream on Tuesday, you saw a lot of red color, and today is a bit of a mix, and I saw there was some updates on inflation news and stuff like that, comments on it from USA. So there's a few things going on right now. Interesting to see though. Bitcoin down to 60 again. When you look at this chart, if you look at this chart, you can see that it's been quite a drop since the highs here at 70s already. But who knows where this will go from here, you know. Very bullish since September, and then it comes back a little bit now. So yeah, interesting to see. And you know, I don't have a Bitcoin position, but I'm just curious to track it and see how it moves. I see Tesla has gone up a bit again. We talked about it when it got close to 100, right? And you know, 1 year ago it actually went down to 100, and it maybe looked a little bit, it was heading towards 100 again here, but it has changed up again now, and they came out with some good earnings. So also hard to say where Tesla is going. I see the canopy is down a bit. We have pulled that up quite a few times lately. There's been some big moves there. China and Hong Kong is up today. I saw here on the different columns. Emerging markets 2 is up. You don't see that so often, the colors in this region in this region column. So definitely some big moves today. Shipping down. Uranium up again. We have touched a little bit on uranium. Look at this. Look at this chart. It looks really good. And even if you pull back here, it has reversed a little bit now, you know. So it looks good for uranium. Is lumber. Lumber is up. And for ALTO, corn and wheat is... Corn is actually up 2%. Turn a little bit around since here in February. But overall, it's down substantially, right? Nvidia back up. Rare earth. I saw also lithium is up. Bit flat though since here. Since a while ago. Feel like a lot of these charts are similar now. A bit at least. Cloud computing up 3.5%. This isn't too bad since like 2023. Haven't added many companies in that sector, to be honest. But definitely gonna keep looking. Bit sideways and up and down. This is good year. And I saw transportation. There was a lot of car companies in the daily movers today. They're both up and down, so. This is transportation, like a ETF for transportation. Coffee dropped a lot. But on a big move up though. Maybe you'll see it drop a little bit more like around here, and then who knows, maybe you get a bounce up again after that. I don't know, like just interesting to see all these big moves today. Usually you don't have too much color in the dashboard, but today you got both red and green actually. So but overall it's been from what I've seen so far in my tracker sheet and everything, it's been quite bullish day today. So I'm happy with that. And I think even, you know, my position now is limited to ALTO, so I think ALTO was up a bit today. Not a lot though. And by the way, they come out with a Q1 earnings report on Monday. So they're gonna report on Monday, and I'm not sure if this is how it's gonna be, but sometimes with ALTO, what you get just before the earnings report is also some news on some of the development. So I'm kind of hoping that they will at least come with an update on the Vault thing, how's that going, and I'm hoping they will land that deal soon, because that would be good. Then we have that done, and you know, summer of 24 is when they were always saying that the carbon capture program would materialize a bit. So they are in route of making that happen, but you know, they told us about the Vault deal last time, so I want some updates on that. So here's just a link to the conference call. Usually I tune in on those on the ALTO ones. And last time Justin was on there and asked some great questions. Justin been a bit quiet on ALTO late. Not really, but I haven't seen him post a lot about ALTO lately. He's very busy with one of the ticks I'm gonna pull up today with the PBI. But I've seen maybe he has some updated comments on his article. I think he has had some updates on Twitter. Not so much on the article. It's from the beginning of April. And I've seen this before. He's fighting off a lot of comments that he thinks are wrong. So it's worth it for everyone interested in ALTO to read through this and check Justin's comments out, because he's making some good points, and people are trying to say that he has been wrong on ALTO so far. But I don't think he has been so wrong. I think everyone got it wrong on the Q3 one. Because of the poor management execution and updates to the market and everything. I think what Justin has said, other than that, has been pretty spot on actually. So I'm confident in Justin's view on this still. So yeah. But will be interesting. I hope he tunes in for the Q1 conference call as well and ask some questions, because I really liked that last time. So that was good. Yeah, so that was ALTO. Just a quick update there. I didn't plan to talk about ALTO so much today, because we're still waiting there for a few things like the Vault deal and the Western assets, and hopefully we will get some good numbers on the quarterly reports in the meantime. But of course, that has been what has been disappointing lately. So who knows what we're gonna get there now. Personally, I hope for like decent results and some good updates on what's going on there with the Vault deal, and maybe even they can hint towards if they are selling planning or trying to sell the Western assets and all that. And I saw, by the way, also on Seeking Alpha, there was this one. It's a sell article, a bearish article. I read through it. It's good to read bearish take also, and he was of course like, he disagreed with a lot of things Justin said in the comments down here, and didn't agree with them that it was so easy to sell the Western plats and stuff like that. So yeah, good just to read through it so you get both sides here. And here is where he talks about where they disagree a bit, both on the valuation and how easy it will be to sell these things. So it gets a bit complicated as well with some of these numbers, but and also there's been ethanol news in general, which, to be honest, for me, I think it's a bit complicated to understand. I need to spend more time to try to figure out everything and how all these updates are working. But if you follow this guy, he has a pretty good take on like the updates and stuff, and then you can go dive in and read more about how all of this work. And I just haven't had time to do that yet. But this is gonna be influential for Alto as well, because they talk about the special the aviation fuel, you know. So and the what do you call it, like the incentives to create these kind of fuels, so in the GREET deal. So I'm waiting a bit on a conversation about this, and maybe you will hear some of it on the Q1 report on Monday. But enough about Alto today. I just wanted to say also, this is a YouTube channel for the Norwegian Oil Fund, and they recently had a conference, and it's like a 3.5-hour video where they have some interesting people talking. I'm in the process of watching it, and I found it really interesting, so I thought I should mention it on the stream. And they bring up some good points about how they deal with like failures and how to learn from your mistakes and stuff like that in these big firms and from these important investors and stuff like that. So I really liked how the conversation there was going, and found it really interesting. Also in hindsight of our BNED situation, you know, where Dane and I have taken some time to see where we got it wrong, where we can learn and improve and not do the same mistakes and stuff like that. And it aligned a little bit with that, the themes, but I haven't watched it all yet. And I've been thinking also a lot about just like a portfolio management recently. I've jumped a little bit around with how to do that so far in all my investing career, and I'm like trying to figure out what's the best way to move forward and try to dig out a new path. When will I be happy with like a percentage gain? Sometimes maybe, you know, 20 to 30% is pretty good, and maybe you should be happy there. And but then you have the counter arguments of people selling too early, and you see the winners run. You know, I have experienced that myself in a couple of tickers, but NNBR for me has been the most painful one, where it went up like 400%, and I sold off just a double. I was pretty happy with it, but still, if I let it run in less than a year, I would get four times, you know. So it's hard. That part is hard, and I think you constantly need to think about it and remind yourself on like what you want to do and what you think is the best, and maybe test a few things out. So and also how many tickers you want to have in the portfolio. I think right now I only have one. I would want more, but I'm a bit strict with my cash lately, so I don't have the opportunity to just buy more. But if I could, I would have bought more than one, of course. One is a bit crazy to have, in my opinion, but right now my situation is like that. So I'm gonna spend like the next year to try to diversify a bit more and add tickers that I really like. And I know Dane is in the process of doing something similar, and you will hear, of course, from us if we buy something new and stuff like that. So it's just interesting. And I this was like a bit, it's recently 8 days ago, and the names is like Howard Marks are there and other people as well. So I found it really interesting and valuable, and I want to watch the rest in the near future, and I will. And then I saw they had also an interview with Karen Griffin, so he was involved in the GME thing, you know. But check the channel out. I kind of like this one. Anyways, I want to jump into the fundamentals then. And the first one today is PBI, Pitney Bowes. Justin is involved there as well. And I know Rod got involved, Rod Altsman, also involved in the GME saga. He got involved recently. And if you see PBI today up 25%, that was on a good earnings report. And the fundamentals, okay, it doesn't look super compelling right here, but there's a story here, and there's been also a development in some recent changes in the boards and stuff like that, and it has a lot of the same participants as GME had, so there's some similarities to GME going on right here now, but not anywhere near as similar, you know, in total. But there's some similarities, and you see some of the same people are involved. And I know Justin has written along or some good articles on PBI as well, and I've been following them for quite some time. I owned them in the past, and they've been dropping pretty low actually, and now it took out the 52-week high today actually. Look at this spike straight up, but it was down here. I've been following it all this way, so you know, I didn't own it at the right time, but here it's cheap, you know. And Justin has admitted actually that he got it wrong. He wanted them to sell off some parts of the business that he was pretty sure they were going to do, and they never did. I think that was his thing. Don't count on me 100% on that, but he at least admitted that his thesis was he got it wrong. But then he saw a different direction, and then there's been some development in the story there with people coming in and trying to get board seats and stuff like that, and that has been successful. And now in the near future, this is gonna materialize, and you will see some changes and stuff like that. So, and there's some owners here. I think who was it again? Hestia. Those are the people who have come in now, who was also participating in the GameStop saga. And I guess the other one has sold out because he was a big owner, and I don't remember the name right now, but it was one of the big like really big investors, the big names. If it was Bill Miller or something like that. I guess they are out then. Anyways, Hestia has entered, and that's kind of the story here now. There's a lot of things going on Twitter with them today, of course, because of the job, but also in general. You can see here Justin updating. I'm not going to read through all of this now, but there's some good comments here today, and also from the past. And the guy, I just asked if he think Hestia is selling out lately, and then he said like their price target is 5 per share. And you know, today is 5.25, so if that's true, it has a lot of upside still in their opinion. I just wanted to find Rod's tweet as well, but I can't find it right now. But I know that he just posted something about. I think he didn't tag them, that's why I can't find it. But I know he's involved. Rod Altman. So more people talking about the similarities with the Hestia and all that from the GameStop situation. And Justin had a Q&A on his YouTube channel, but he later deleted it. He talked about Alto and PBI, so he's very dialed into this. Anyways, just wanted to pull up PBI because there's a story going on there right now that is developing in the way that the long investors are hoping for, and I think like very near future now you will get some more news about Hestia and their restructuring in the board and stuff like that. There's been a few people moved out of the board. I'm sure you can find some news about it here on Seeking. Here, a new interim CFO. Here, a new. This is a bit. This was in October. Pitney Bowes gains as shareholders elect Hestia board nominees. So they're hoping for Ryan Cohen to come in as well. I think, if I remember correctly, Justin has had some parallels to how he could benefit from using them also, but I can't remember what that was about. Four seats for Hestia, lots of other independent board members. However, great odds of removing Mark, in my opinion. I think they did that. They did remove the CEO. I'm pretty sure they did that. And I know they've been talking about this Kurt Wolf guy as well. Here, Mark, that's who Justin mentioned. Mark Lautenbach has stepped down as president. So they have changed a lot. They have changed a lot in the management and board, and now Hestia has control. How much did they own? They own 9%. It's interesting, but I just, you know, with I've talked about this with my cash position and stuff like that. I've been too tight to put it into PBI or anything like that, and I feel like now I think it can run way higher, but I've been tracking it all the time and I didn't buy here, so I struggle a bit to buy up here, you know. But maybe that's something you should become better at and actually do, because I mean, if Hestia has a $15 price target on this, it still has some serious moves to do, you know. Hestia has a $15 price target on this, so yeah, it's definitely interesting, and the story here is very interesting, and it's now that stuff are finally happening for them. Interesting. And but okay, I just wanted to pull them up and go through PBI. I have them in the tracker. Fundamentals doesn't necessarily look right here like something that I would be super interested in with my strategy, but then you get the story in on top of everything, and that kind of makes it interesting again for me, I think. And there's a thesis. Go through Justin's articles here, and you will see what he thinks about it. He knows how to explain it better than me. And of course, just because he thinks something, and he has admitted that he was wrong in the past on this one, so you shouldn't buy everything that he says for sure, but just read it and see for yourself what you think. And I think the story right now and the development is highly interesting. A little bit of a short interest as well, but nothing to pay too much attention to, I think. Anyways, moving on to Boom, which is also a ticker I've had in the tracker for quite some time, actually. DMC Global. And they are based in Colorado. Provides a suite of technical products for the energy, industrial, and infrastructure markets worldwide. The company operates through three segments: Arcadia, Dyna Energetics, and NobleClad. The Arcadia segment manufactures, assembles, and sells architectural building materials, including storefronts and entrances, windows, curtain walls, and interior partitions, architectural components, architectural framing systems, and sound control products, sliding and glazing systems, and engineered steel, aluminum, and wood door and window system. It sells its products through a national in-house sales force for buildings such as office towers, hotels, education and athletic facilities, healthcare facility, government buildings, retail centers, luxury homes, mixed use, and multifamily residential buildings. The Dyna Energetics segment design, manufactures, markets, and sells perforating systems, including initiation systems, shaped charges, detonating cords, gun hardware, and control panels and associated hardware for the oil and gas industry. It sells its product through direct selling distributors and independent sales representatives. The NobleClad segment produces and sells explosion welded clad metal plates for use in the construction of heavy corrosion resistant pressure vessels and heat exchangers for oil and gas, chemicals and petrochemical, alternative energy, hydrometallurgy, aluminum production, shipbuilding, power generation, and industrial refrigeration industries. It sells its product through direct sales personnel, program managers, and independent sales representatives. The company was formerly known as Dynamic Materials Corporation and changed its name to DMC Global in November 2016. And it's founded in 1965 and headquartered in Broomfield, Colorado. Sorry for a long read there, but it's important to understand the business, and they are in three different segments that are a little bit different to each other, you know. it does trade 9% close to the 52-week lows. Very little insider buys, but there's been some lately in the last 6 months. I just want to go through that. And James O'Leary, who is the director, is the one who has purchased shares here. And before that, very, very little, as you can see here. So I'm not sure how meaningful that is. It's a smaller size, but almost 100k. And he bought at 16, and now it's the same. Actually, exactly at the same price, 16.39. So he hasn't made any money on that so far. I see that they have issued a little bit of shares lately since the pandemic, but the revenue also, look, it's pretty up in the same time. But so is the debt, and they have taken on more debt here every year. They paid off some and then took it up again. And I assume that they have financed this acquisition right here with maybe issuance of shares and taken on some debt, or one of them. And then also they stopped to pay the dividend in that year. So and that's probably why the revenue is up. You see also an increase in the book value, and then you have had some growth in those years in the tangible book, which is nice to see, you know. And keep in mind, it trades at 16.5 almost, and they have some cash generation. Operating cash flow is 336, and free cash flow is all like 2.5. And then you have earnings at 120. It looks good on all the metrics, and I've kept it in the tracker for quite some time. And I just wanted to pull it up because it was one of the stocks. I can show you in the tracker. It was one that is currently trading close to 52-week low, and like under my attractive buy rating. And I just thought I should pull them up and revisit them today. If I can only find them here. Boom, here. So you see they're getting close to what I put out as a purchase, interesting purchase area last time, which was $14. And I added them almost at New Year's in 22, 23. So they've been in the tracker for quite some time, and the moves hasn't been that big, you know. But they are now close to the 52-week low. And they came up with an earnings report where they had a miss on revenue, and that they were in line on the earnings. So pretty okay report, I guess. But I thought they looked well on the fundamentals still. You know, they are trading above tangible book, but if they keep dropping a little bit more, you might get it closer to the tangible book value, and it's already below book value. But also historically, they have created some cash here on the operating side and also on the free cash flow. But I want to see the higher compared to the share price today. So that's not really enough for me. I want to see it a bit higher. Earnings at 1.2. And then I kind of want to check this acquisition, what that was. And that was in 21. Here, Arcadia. So that's the acquisition. Okay, so I'm not familiar with Arcadia or anything like that, but I just want to see if anyone is writing about them on Seeking. They have 163 in debt, and on cash on hand they have 36. Short-term debt 23, so they can handle the short-term, but they do come across as levered up here, but it doesn't issue much shares in my sheet, so that indicates that they will have control of the debt here, the long-term one. But it's cool to see what that debt actually is, so we can go into the quarterly report here. Long term 85, so it's even less than what I saw. But of course, the current liabilities is not a problem for them, it seems like. You see, they have paid it down as well. Seems like it's due in 26, so they have time on that, and also 28 says here. So yeah, I'm not worried about the debt in this company. And then this seems like a good year for them, though. They had a somewhat similar year here before the pandemic, but that was before the acquisition. So who knows how much they can improve? And what caught my eye a bit was this revenue growth as well as the equity growth here. And maybe now you can, if you exclude this, where they obviously bought this Arcadia thing, maybe you can see some steady growth here as well. So I kind of want to check out a few of these articles. He has a hold rating, and the price is around the same now. This was written in March, in the beginning of March. DMC Global faces challenges, including margin headwinds and declining operating margin in certain segments. Boom plans to deleverage its balance sheet and introduce new products to improve margins. The company expects Q1 EBITDA to decrease, but international sales and new product production could offset headwinds in certain segments. So it seems a little bit slow moving, this. Boom's cash flows have gathered momentum, and in 2024 it plans to deleverage its already robust balance sheet further from its free cash flow growth. I think the stock is reasonably valued with a positive bias versus its peers. Compared to my last analysis, the company currently operates in a more challenging environment, so I think investors would do well to hold the stock and restrict their returns expectations. So that's what we saw. Also, like what I was talking a little bit about is I need more data, so this needs to stay in the tracker, and I need to pay attention to it because it does trade close to the 52-week low. So if this keeps dropping and it comes out with new reports about how they have maybe grown their cash generation and revenue and everything, which they have done the last 3 years, it can start to look way more interesting than it currently is doing, you know. So that's why I pulled it up, because I saw, maybe you can see that you see a little bit of a trend here, and that we are in the beginning of that one. In full year 2023, Boom's cash flow from operations led by higher revenues increased by 47% compared to a year ago. Free cash flow nearly doubled in full year 2023. The company uses free cash flow for long-term debt repayment, distributions to its Arcadia joint venture partner, and investing in marketable securities. Boom's net debt of 72 million as of December 31, 2023. Its leverage debt to equity of 0.28 times improved from 0.31x a year earlier. The current leverage is also lower than many of its peers. Its total liquidity is 94 million, cash plus revolving credit facilities. We saw that on the debt here. They have a revolver as well. So its financial risks are limited. However, the company has the financial strength to withstand challenges for a long period, as reflected in its robust balance sheet. I expect returns from the stock to improve in the medium to long term. And I kind of also like the fundamentals here as well. It's not cheap enough for me. It needs to drop more for me. But I'm not ignoring this cash generation of almost around $2.50 in free cash flow, and it's growing. So this is definitely a ticker I want to keep my eye on. And remember, I had like a price, interesting price to buy. It was like $14, and it lights up like light green. That means like, I put it like a percentage, so I think that's like 20. I don't really remember what kind of percentage. It just means that it's getting close to this price target that I have, which is interesting, because then it takes out completely the 52-week low. And look at this historically as well. You get these spikes up and down here. And then if you follow, you see the support line here is pretty solid in recent years. So it will be interesting if it takes out the 52-week low and see where it lands. You know, maybe here around 12, 13 is the next resistance or support level, I mean. You had some big sell volume here approximately a year ago. Just interesting to see. No, I like it. I'm gonna keep it in the tracker, of course, and I'm gonna pay extra attention to this ticker, and I hope for a big drop, where it takes out the 52-week low, and a dream scenario where they keep generating good cash flow, which they have done, and has dropped quite a bit actually. Since September, it was at 27, and now it's below 17. You know. So yeah, I found that interesting. DMC Global is a small company with diversified revenue streams in construction, energy, industrial processing, and transportation sectors. The company's segments include Arcadia, Dyna Energetics, and Nobleclad, each specializing in different products for various industries. Despite stagnant revenues, Boom has shown strong bottom line growth, improved margins, and increasing free cash flow, making it an attractive investment opportunity. I just wanted to check the margins. They are a bit up here on the 3-year average, but I want to go to the single years. And you can see here cash flow and also free cash flow and net cash flow are pretty well up. So yeah, this is interesting in my opinion, but not quite cheap enough for me right now. Just want to check the owners. Yeah, no really familiar names that stands out, except the normal ones. I just saw these Earnest Partners though. They only bought 10 shares in the last one, but they own 5%. But they have a ton of companies. And where is this ranking for them? 178. So it's not the biggest position for them. Who are they though? I haven't heard of these. Let's get real fancy and watch their video. I think, is it picking up like an echo? We don't need to watch this stupid video with fancy website though. About us. Want to check about us. There are tons of videos. All right, enough of these. Serious firm, no. Yeah, that was the only one that stood out to me. They also have a 13G filing. Anyways, thought I should pull it up because I found a... Oh, hey Max. Didn't see your comment. Hey Max. Nice to see you. I haven't seen you in a while, Max. Hope you're doing well, and thanks for tuning in again. And I hope you are not driving. How's Germany? Here's the weather has been very nice lately. And I'm counting the days to the Oktoberfest already. I'm very ready for the Oktoberfest, Max. No, I find Boom a bit interesting to keep an eye on and continue to track. And you know, if they come out with that they can continue this development while the share price is going down, it gets interesting for me. Anyways, to the next one, EAF. Also one I have in the tracker. There's been some movement in the tracker, I told you guys. Look at this. A lot of tickers are green today. Few are down, but most are green. And there's been some insider buys as well recently. If you see here, these are the insiders. And I saw in like Lumen, where are we? Also in Love, we covered Love not too long ago. Where are you, Lumen? Here, 4 insider buys. This is a while back though. We can see. This is kind of what you want to see, right? Been in Love, Con. Insider buys in Con. Martin Douglas. Look at this though, nothing. Sumis, we checked out Sumis just a few weeks ago, I think. So there's been a lot of moves. So this is why you see some of the tickers today. They are from my tracker sheet. Nice, Max. Nice to hear that you are doing well. Yeah, I'm doing good. I'm been a bit busy lately, and just trying to work on you know, on portfolio and improve the results that are now in a bad position for the year. So just like always, just trying to look for new things and also things in the tracker and see what happens. But EAF, which is Graph Tech, we have talked about them a little bit earlier on other streams. Look at this insider buy, 4 million. So that's a big one. And you can see it was from this Colonial House Capital. I have checked them up before, but couldn't find too much. Couldn't find too much on them, like a website or anything fancy like the one you just saw. And they are only owning, I think, EAF according to Open Insider here. Well, maybe we can find more stuff on Whale Wisdom. No, it seems like that's actually their only position from what I can see at least. Some good ownership here. So I'm just gonna read the description quickly here too. Research develops, manufactures, and sells graphite and carbon-based solutions worldwide. It offers graphite electrodes to produce electric arc furnace, steel, and other ferrous and non-ferrous metals. And petroleum needle coke, a crystalline form of carbon used in the production of graphite electrodes. The company sells its products primarily through direct sales force, independent sales representatives, and distributors. GraphTech International was founded in 1886 and is headquartered in Brooklyn Heights, Ohio. Old company, but if I remember correctly, like these people have suffered a lot from competition in China. Look at the revenue. Look at this revenue drop. You don't really want to see this, you know, almost cut in half. And they have also been buying back shares in the same time. And also manage the debt fairly well. Short-term debt 0 here, and they do have a lot of cash on their books. But still, pretty heavy debt. So it shows up as levered, and the dilution is pretty heavy here in my sheet. But it does trade cheap, 177. It's not even close to the 52-week low actually, which is 118. And when were these people buying actually? At what price? 178 was the big one, and then 148, which, you know, is around these levels. So Max, I bought GALP this week, maybe a little bit late. GALP, I can see if I can find them. By the way, Max, we had Guillermo from Y Sheets on Saturday. I thought it was a great stream. I thought it also was. He came with a lot of good stuff to talk about entrepreneurship and stuff like that. So if you haven't watched it, Max, I know you have talked about Y Sheets in the past. Feel free to go back and watch it. Very interesting guy, in my opinion. Is it this one, Max? Oh, you watch it. Cool. GALP.LS. I assume it's this one. And what did the Mastercraft do? Here. Oh, they went down today on a bullish day. Getting close to the 18 mark that I have set for them. For some reason, the inside buy doesn't show up here, but there's been a big inside buy here too. Look at this. Pretty heavy. And, you know, above today's level. So it's interesting for sure. And they have cash on their hands as well. They have room to do stuff. There you go, GALP. We'll check them out. It's oil company. I think I have the right one this time, Max. I will do them after GrafTech here. But GrafTech 177 in price. Look at the historical operating cash flow and maybe more important, the free cash flow, 62 cents. So, you know, this is quite cheap in my opinion right now. But it is a big worry though, and that's the fact that they are, if I remember correctly, about the competition from China is kind of killing them. You see the big, massive drop in the margins lately, so that's a bit worrying, you know. Maybe they can't turn this around. What can you do with this kind of type of insider buy? Oil company from Portugal, they found 10 billion barrels oil in Africa. Okay, so I understand why you said maybe you're a bit late then, but interesting. That's interesting. Oh yeah, they are talking about China here, right? Activist investor Undavia is fighting for board seat to change the situation at EAF. This is a very positive change. Let's check out that because just gonna quickly read through this because activist letters are interesting. They want to shake things up and improve the business, you know. Oh, hey, Value. Didn't see you tune in, Value. HDSN. Oh, that's funny, Value, because I checked them before the stream. I checked the HDSN and the refrigerator before the stream. I will pull them up. I have actually just an hour before the stream. I went through them quickly. And the Portuguese company still has potential. Yeah, I'm sure they have with that kind of fund, Max. That was funny, Value. I pulled these up before the stream. I was kind of I went through the Seeking Alpha articles and I wanted to save them a bit and spend a little bit more time before I pull them up. But since you are mentioning them, I will pull them up today. Okay, where were we? This investing letter. As one of the large shareholders of GrafTech International, the Undavia Group is seeking your support for the election of Nilesh Undavia at the company's upcoming annual meeting of stockholders, which is scheduled to be held, blah blah. It is our belief that shareholders will benefit immensely from having a large shareholder on the board to correct the pattern of egregious mistakes made by its leadership in the past. These mistakes include a broad spectrum of poor decision and failed oversight. Failing to identify and appoint stable executive leadership as the company has endured 3 different CEOs since 2019. Good point. Failing to create an execute a comprehensive strategy to repair customer relationship damaged by the imposition and enforcement of long-term purchase agreements on customer base amid the peak pricing environment of 2017 to 2018. Mismanaging environmental risk along with associated regulatory compliance and government relations, resulting in a temporary suspension of one of the company's primary operating facilities in Mexico, which significantly impacted production and sales in 2023. Failing to develop a CEO succession plan, which resulted in search for a CEO for 6 months, only to appoint the former CFO as the CEO in March 2024, and rewarding directors by increasing their pay despite poor financial and share price performance. These mistakes have cost the company significant market share and diminished its industry leadership, even though GrafTech has premium assets that should make it a leader. Shareholders and bondholders have suffered a wanton value destruction. Shares are down 90% since the IPO, and the company's bond trades at 64 cents on the dollar. The roots of the board's problems, in our opinion, are its lack of industry expertise, business savvy, judgment, and share ownership. And then they talk about the new CEO here, and they are questioning him and his experience. It's interesting. It's noteworthy. I think the fundamentals looks pretty good, and saying that I don't like to see this revenue cut. That's and the margins dropped, and then the competition from China. So there's a lot of things that I don't like. But if they can just turn this around a little bit, it's cheap here. Earnings, of course, got a massive hit here. And of course, in the back of your head, the insider buy here, which is big, you know. Look at this chart, terrible, terrible. But it was a bit cheaper though, 118, yeah. So maybe wait and see if it comes down a bit again. It got oversold here. And it hasn't really bounced too much back, you know, and there's legit risks here. Only a 8% short position, though. But that's why I kind of want to... When was this letter? Because I kind of want to follow that story. This was in the beginning of April, so like a month ago. They haven't done anything, have they? A lot of cool websites today. Like a battle there now in the boardroom. Sorry, forgot to zoom in. Max is saying with that management, it's maybe hard to gain investment capital from funds. Yeah, I haven't dived into this type of management, but they sure doesn't seem to be very good so far. And then you know everyone will understand that this now has a messy recent history, but it's a very old company though, and you see here there's like, since these shares has declined a lot, but they managed the debt fairly well in a period where they have like drastically, you know, decreased in value. So the thinking here is, of course, that they can manage to shake things up and maybe add new people to the board and in management. And I'm assuming like these people, or not these people, but these people believe that colonial house capital, they believe that that will work out, you know. The board also had an open letter to shareholders. They just want to, it's like a battle, so they want to vote for, and the other guy was like against it. So I'm not gonna bother to read that. Obviously a battle going on. But good catch though. They do have cash. $28. The long-term debt is due in 28, and they also had a revolver that matured in 27. And these are also in 28. So they have time. They have time on that debt. So I think like with the activist investor involved here and the insider buy, I'm assuming maybe is this the same people? No. Here's that guy. These are two different people also. It's interesting for sure. But they need to turn it around. And like you need a catalyst here. You need something to turn this around, because this is not good. This is not looking good at all. And the competition with China and everything, they are in a tough position for sure. This last year has been horrible for them. But that's and I need it cheaper even. But look at the 7-year average. Like compared to the today's share prices, it's not bad. But they need to turn around, and then you know you need to pay attention to this battle they have in the board right now. Okay, so sorry, I need to type it in. What was it? GALP.LS. Because this is foreign max, I don't get all my usual information. I get the fundamentals, but the ones where I have like a Google Finance function, it doesn't pull it in because it doesn't recognize the ticker. So that sucks a bit. But the fundamentals are here. I'm just not sure if I can trust these numbers because it's outside of the US. So that's my only worry here. But we can check like we can get the information here, you know. It trades at almost 20. And you said that they had a recent find with tons of oil, right? And I assume that they have had a nice... Okay. Yeah, they've had a nice bounce, I was gonna say. But good purchase maybe, Max? There's a lot of comments here from this guy, the investment doctor. Yeah, I'm seeking here, Max. Just need to X out on a few things. GALP.LS released its full-year results and made a significant new discovery in Namibia. The company's share price has only increased by 15% in the past 7 months, creating a potential opportunity. GALP's production rate and refining margin remained stable, but its EBITDA decreased by 4% in Q4. It also made what appears to be a sizable new discovery in Namibia, while the Brent oil price is now trading above 90 a barrel. Plenty of tailwinds for GALP, but the share price is currently just 15% higher than where it was trading 7 months ago. So I wanted to check if this perhaps created an interesting opportunity. Just want to quickly go through like the thesis here. I have a small long position GALP.LS, and as I like the company's low operating expenses thanks to its exposure to low-cost oil fields. This sustaining capex is low, which creates additional financial flexibility for the company. GALP will pay a 54-cent euro dividend per share. Blah blah. I'm looking forward to seeing the results of the Namibia discovery, and although I don't think this will add billions to GALP's market capitalization, it could further fill its development pipeline. The Bacalhau oil project should be up and running in summer of 25, and this will add a few 10,000 barrels per day of low-cost oil to GALP's production basis. Interesting. It does look promising, that though. CEO today said that, and this is recent, said they wanted a partner that will cover the capex and move fast, that GALP cannot fund it alone. I think they will get what they want. Chevron just entered Namibia today. For a block. Why not Chevron for GALP shares? They're trying to connect, like make a connection to Chevron. %20 up since he wrote this article. And then he said he was only moving 15%, so it has some movement lately. All right, Max, I agree. Like, it seems like for me that I'm a bit too late here. But I do agree that you know, this guy's saying here, even if GALP does not find a commercially viable discovery, the stock is already undervalued. Right now, I'm valuing Namibia at absolute zero until there are more details. So he sees value despite, like, excluding the new find in Namibia, and if that works out for them, I can see it still moves up, you know. Small starting position, yeah, good play. I think this looks promising just by a quick glance of it. Like I said, I'm not sure how much I can trust my numbers, but I can see a repurchase here, which is pretty big as well. They have taken on debt, and they do look a bit levered, you know, and just in general, like the market cap is a bit steep for me in terms of my what I usually aim for. But yeah, I'm not gonna sit there and say just because the market cap is too big or something that I don't believe that this has a lot of upside. But I wouldn't have to dig way more into it than what I've done now. But interesting for sure, and promising if this Namibia find turns out. And I think from what you are telling me, to enter like a small starter position is the right way to handle this, in my opinion. And Max, let me know, like let me know the development of your investment here. It would be very interesting to hear. So value, I'm not sure if you're still here, but I can pull up HDSN right now. And as I said, I did them before the stream, and I wanted to save the ticker a bit, but what messed a bit with my my analysis here was this big cash position that they had here. I'm not sure if this is legit, but they don't have it anymore, so I guess it doesn't matter, or you have to check what happened there. But I'm just gonna read what you say though. HDSN, reclaim, recycle, refrigerant, debt reducing, recent dropped after earnings, and it dropped 7% today. HDSN is in a good spot because of a new law called the AIM Act. It's about reducing the use of certain gases that are bad for the environment. HDSN is already in the business of recycling these gases, which would help them get new business. Under the Act, it's a gradual phase in, and by 2030, 85% of refrigerants gases need to be recycled, not new. I saw that in Seeking Alpha articles. Still here, but have work meetings shortly to jump into. All right. Glad glad that you are still here, and you know, I will just quickly go through them, and maybe we can pull them up again on actually on the weekend. We're not going to do on a Saturday stream, but on a Sunday instead. So just keep an eye on our Twitter profile. We will update the times and stuff like that. But I'm busy on Saturday, so I can't get on a stream, but I will do it on Sunday with Dane. So maybe I will save the ticket for then, and if you're a bit busy now, Value, we can revisit and check it then. But I read through a lot of these comments and articles here, and this Luca Socci, he got a lot of praise for writing a good article. I haven't seen his name too many times before, but I have seen it. I didn't read through the whole thing, but I just quickly tried to get a impression here. And they had like a beat here, you know, which was yesterday. And this is a bit long, but he was saying like, and I saw this guy was commenting a lot on this ticker. So he was saying like, this doesn't seem very complicated to me. The level of stockpile refrigerants was unclear when 25 targets were published. Looks like that amount was made known, and due to that 2021 stockpile, there was a compression in refrigerants prices and thus a compression in margins. Hence yesterday's earnings call. This delay will naturally change the 25 targets. They want more info before they release new targets. That's it, nothing more. Otherwise, there has been zero change to the bull thesis, except the gains that people were hoping for are going to be likely realized later, 2025. All regulatory tailwinds are intact. HDSN has a rock-solid balance sheet and strong industry positions. Short-term marauders can play around with the price action. Fair enough, that's the game they are playing. The long should be thanking the lucky stars for this incredible opportunity to add to this long-term value play. I know I will. And I did see it does. I just need to change the color here. It does trade at $9 right now, at almost 20% for the 52-week low, and it could drop even further. Look at this massive drop, and that's what they talk about in the article also. It has dropped down to 52-week low here now, and then it jumped back on, and not oversold on the weekly chart here. So who knows? Let's pay attention to it and see if it. I might add this to the tracker later because I did find it interesting. They have assets like on book values $5 and $3.70 in tangible book, and they do generate cash even in the last 2 years, even if it's a bit down. They have operating cash flow at around $1, and look at the low capex. So the free cash flow is 90 cents. They are not paying a dividend, and the earning is positive. And no debt. They're good to go, you know. But not a lot of cash either on their hands right now. But then it's an interesting point with the new law called the AIM Act, which I'm sure they talk about in the articles here. Here, the AIM Act starting 24 will create increased demand for reclaimed refrigerants benefiting Hudson. So let's just read quickly about this AIM Act. Starting in 2024, an extremely important HFC opportunity begins because of the AIM Act. As the EPA explains in 24, the HFC phase-down schedule mandates a 40% baseline reduction in virgin HFC production and consumption allowances. What does this mean? Since HFC and other legacy refrigerants won't be manufactured, the HVACR industry still needs them because it uses them in their equipment. Hudson becomes even more important because it is not an easy task to replace AC systems whose life cycle is 15 to 20 years and that can still run effectively for several years. Hudson currently estimates the installed base of HSC equipment stands at 125 million units. So we can expect enhanced demand for reclaimed refrigerants. Moreover, several states are making the regulatory environment around refrigerants more stringent to encourage reclamations. Since 2000, Hudson has reclaimed over 72 million lbs of refrigerants, avoiding 84 million tons of CO2 equivalent GHG emissions. So a lot of like, what do you call it, like letters. Therefore, Hudson can be also viewed as a green play, which sees favorable market conditions due to environmentally friendly law and policies. Now, because of the AIM Act, the supply chain sees some changes that benefits Hudson, as shown below. Okay. So definitely interesting value. I agree with that. And like I said, I did pull them up before the stream, and I was planning to maybe save them for Saturday. And I think I'm gonna stick with that and try to read a little bit more about them. Not Saturday, but Sunday this week. Read a little bit more about them. But the main thing here is like the fundamentals looks good. I just wanted to drop a little bit more, even though I know it has dropped quite a bit recently. There's a lot of things going on here, you know, that could work out for them. And I also saw like when I did it before the stream, I read through a lot of these comments. Right now, I can't remember where I found stuff, but I just saw that this author is like very open-minded and replied in a good way, in my opinion, to criticism and like other thinkings and other like risk factors and stuff like that. It was a balanced view, in my opinion. And these were talking about a spot refrigerant index to follow, and that they can't find it, but it's like in the Bloomberg terminal and stuff like that, which most people can't afford that stuff, you know. So yeah, value. Thanks for the ticker. I think I will need to read a little bit more about it and pull it up again on Sunday. But I will come back to it. I'm gonna put it in my notes. And that was funny that you mentioned them, because they had caught my eye before the stream. But just a quick take though, and the fundamentals looks good. It really does. And if they get some more business because of this new law, this looks a bit promising. I'm not gonna add them today because I know I'm gonna pull them up again on Sunday. So yeah, I think I will go to the next one. HDSN Hertz car company. Hey JD, I didn't see you there. Nice, thanks for tuning in, JD. Took a position in PBI before earnings. Well done, well done. Up 25% today. Looking good to me, including on technicals. Yeah, I agree. Like I said in the beginning of the stream, I've followed them for years, actually. I followed Justin's thesis there. He admitted that he got it wrong, and then he kept digging and found like still things that he liked. And then you got all that development with Hestian, them shaking up the board and management team and everything like that. So I've been liking it for quite some time as well. And I've owned them in the past. Sold out, and I didn't get in at the right levels that I should because of my restrictions of cash and stuff like that. So that's just, it sucks a bit, but that's how it is. But I've been tracking them for quite some time, and it seems like now in the nearest future you're going to see everything materialize a little bit, you know. So yeah, happy to hear though that you were smart enough to buy them before the earnings. 25% off today. Is there a way to reach you guys out on Discord or something? Yeah, you can reach us on. You mean more like the Twitter profile, Max? I do have a Discord. I just I don't want to share it on the stream, you know. But I do have a Discord. I can, if you contact me on Twitter, I can give you some of the details on my Discord and stuff like that. If you want to chat. We are also on Reddit, both of us. If you look in the BNet group, you can find us there, you know, with some of the comments and stuff like that. So yeah, Max, let me know. You can also send an email to our email in our YouTube channel. JD saying they have their X pages. I think you can reach them on that. Yes, you can. I still call it Twitter. We both have profiles, individual and together. So I'm Redneck Johnny. My handle is like LS Redneck Johnny. And Dane, I don't know his handle, but I can find it. Here is Dane, Brew Jupiter. This is our individual ones. And then we have the ones that we have together, which is Stock Laughing 69. And doesn't matter which one you send a message to, we will reply on all three. So yeah, but this Laughing Stock one is more for the channel. Like updates just on the timings and stuff like that. So yeah, you can reach us there. Send a message or email. Yeah, all good, Max. So yeah, Harriet, what caught my eye here was another big inside buy from Gilbert West, which is the CEO, and he bought like for $1 million, which is a big purchase, of course. But straight away, I'm seeing here like, look at these share repurchases, and they do trade close to the 52-week low, so it's not in a good period even. Revenue has gone up though, but look at this capex that they are doing, and I know they do like some rental cars and stuff like that. We can actually read the description. Operates as a vehicle rental company. It operates through two segments: American rental car and international rental car. The company provides vehicle rental service on the Hertz, Dollar, and Thrifty brands from company-owned licensee and franchisee locations in the United States, Africa, Asia, Australia, Canada, the Caribbean, Europe, Latin America, the Middle East, and New Zealand. It also sells vehicles and operates the Firefly vehicle rental brand and Hertz 24/7 car sharing business in international markets. Hertz Global Holdings was founded in 1918 and is headquartered in Estero, Florida. And I understand, like, because of the rental stuff, you know, these numbers are going to look a bit, and I'm not even sure if everything here is correct, to be honest with you, but the free cash flow is negative. Operating cash flow, pretty good. It trades at 5 though. Huge market cap, but look at the leverage. It's insanely leveraged. They have cash there, but not even enough to cover the short-term debt. So this is like, this looks a bit bad. I can understand the big short puts is short interest here, almost 20%. And I have no idea why they spend all the money to buy back shares at this time. Look, they have even taken on debt in that same period. Pretty big debt as well. And then maybe they have spent all that all that money to buy back shares. I don't know what they have spent it on, but it just looks very weird to me. But I did want to take it up because of the insider buy, which is massive, and it went up 12% today. But look at the ownership though, 1%. 1% only. So yeah, I need to dig in a little bit and see what's going on here at the repurchases and everything. I just assume straight away that this management team, that people will not be happy with them. Free cash flow is ugly. Yeah. Yeah, it is. And look, if, you know, it doesn't seem like this is a very well-driven company, in my opinion. But then you had the, was it the director? CEO? But a purchase as 450 at 1 million, which is up on. Oak tree. Yeah, I don't think this looks particularly good. Let's check Seeking if anyone's speaking about it. I just find it, I find it a bit strange that they buy back so much shares and the debt is rising at the same time, and they have also had some sales here. And I wonder what have they spent all this money on? Is it all repurchases? And if you look at the chart, I assume, because this is pretty substantial in the past years as well, that the price was much higher when they did all these purchases, which seems just to me that has been a terrible decision. Let's see if anyone is saying something. Hertz is in trouble and it could get worse if interest rates remain high. They even borrow more now, he says. Okay. Hertz Holdings is in financial trouble because of two very irrational decisions by management. Massive stock repurchases and electric vehicle purchases. Okay. So they are addressing that. When you add in much higher interest rates over the last 2 years and lower used vehicle price, you get a plunge in HDSN stock price. Considering that Hertz filed for Chapter 11 bankruptcy in 2020, one may have expected the management would become very prudent. No, nope. So he's talking about them being idiots, basically. Management took up seats at the roulette table. They recently left the casino and have not made any stock repairs in 2024, which seems to me that's when it's been much cheaper. Oops. They're selling 30,000 of the EVs and got rid of CEO Steven Scher. Okay. The problem is that the damage was already done. Can Hertz be saved? So it's new management, new CEO then. Massive irrational stock repairs. Okay, so that's what we saw. Readers who follow me already know that I'm absolutely against share repurchases. Hertz has, he's saying like the repurchase average cost was almost $20. It trades at 5 right now. Yikes. What was the board of directors thinking? Hertz had recently exited Chapter 11. They already started to repurchase shares. Yeah, and they took on more debt even. And then you get news of maybe people are not purchasing cars or renting them and stuff like that. So Here's a lot of risk. Then the new CEO seems much sharper than the prior CEOs. It doesn't seem like that takes a lot. They're trying to get the EV problem under control by saying 30,000 EVs, but they took some large losses on that poorly executed program. Since I expect continued weakness in used car prices due to high interest rates that could result in Hertz reporting losses, it is difficult to establish an intrinsic value for HDSN stock. Much of the current HDSN value is effectively a call option on bond prices. If interest rates drop, which means bond prices may, but the current recommendation is based on completely different factors, and the stock price already dropped 77%. There's a hold rating now. Talked a lot about the. Was there any comments? Talked a lot about the management team and their bad decisions. HDSN Morons are running this company to the ground. Yikes. And then the CEO did buy shares though. Average price 1960. What the hell? Well, I'm not touching this. I think the short interest is justified here. But if the new CEO comes in, they shake things up, they can turn it around to maybe a bit better quarter, start to pay off some debt. They have solved some things here, you know. But this is heavy, and the market cap's still massive. Actually, not massive, but for us that deals in much lesser companies, like 1.5 billion, that's a lot. I guess they have to issue shares at some point here. So I'm not going to track them, but I did add them to the database there that I have checked them out in the last 3 months. I'm just going to move on. This was too messy. MCS is the next one. So the Marcus Corporation, together with its subsidiaries, owns and operates movie theaters and hotels, resorts in the United States. It operates in 2 segments: theaters and hotels and resorts. The theater segments operates multi-screen motion picture theaters as well as Sunset Boulevard Family Entertainment Center. The hotels and resorts segment owns and operates full-service hotels and resorts, as well as manages full-service hotels, resorts, and other properties. The company also provides hospitality management services, including check-in, housekeeping, and maintenance for vacation ownership development. As of December 30, 2021, it owned and operated 1,064 screens at 85 movie theater locations in 17 states under Marcus Theaters, Movie Tavern by Marcus, and Bistroplex brands, and operated 8 fully owned or majority owned hotels and resorts, as well as managed 11 hotels, resorts, and other properties for third parties. The company was founded in 1935 and is headquartered in Milwaukee, Wisconsin. So cinema and hotels, and first thing that strikes me is like the cinema. I personally haven't been to the cinema a lot in the last few years. I'm not even sure if people go so much to the cinema anymore, but I guess they do, but yeah, I'm not sure. What do you guys think? Do you go to the cinema often, or how is it in your country? It has a 20% short interest, so I'm assuming like there's some bearish sentiment towards maybe the company on its own, obviously, but maybe the industry as well. I'm just reading the chat. Max is saying even the EVs are value burners. Yeah, many car renting companies are kicking the EVs off and have great value drop when sell after some years. Yeah, yeah, they talked about that in the article, Max. Yeah, I think JD is saying, yeah, I think they're selling all of the EVs at a big loss. Yeah, they wrote in the article that they took a big loss on that, 30,000 or whatever it was. And then they have to bounce back after that and get it on the right track, which of course might create good opportunity in Hertz, but it's too early for me to jump in there with that risk. And my sheet was saying like you need to issue shares at some point because that leverage was massive. So yeah, haven't been to the cinema since 10 years or so. How is it in Germany though, Max? Are people in general going to cinema? It's definitely down here in States for people going to cinema. That's my impression too, so keep that in mind when we go through that. That was my first thought here. And it does trade close to the 52-week low, 4%, 3% inside ownership, which is not a lot. And I just want to check the owners here straight away because I assume this is like family owned. Marcus Steven, that's the guy, I guess. Yeah. So he hold on. How much is he owning? 14%. So the number is probably wrong then. JD, for people going to the theaters, I'm saying, yeah, hey, sorry, gotta go. I'll check out the rest later. See you guys. Take care, JD. Enjoy your day and all good, all good. I'm planning to finish up the stream very shortly. So yeah, cool to see that you guys are tuning in regularly. I really appreciate it. I know Dane appreciated it as well. So thanks for doing that and using the chat. It adds a lot, in my opinion, to the stream. So it's great to see you every time. Some people go, I should visit one to have a look how many people are there, but I would go to buy some popcorn, yeah. Or you can just buy a popcorn machine and stream on Netflix or whatever. Or even better, an ice cream machine. Oh, ice cream machine would be something. Okay, let's check here. Beneficial owners. Just want to see this Marcus guy. Where are the chairs? There they are. Yeah, so yeah, he has the voting power, and this is his wife. So they control the company. Yeah, that's just what I want to see. So 3% is not the. They control the company. Those two people, and massive short position. Trades at $12. It is levered, shows up as levered, but not massive or anything like that. It has 58 million in excess cash, and short-term debt is 28, but a bit bigger in the long-term one. But they do generate cash flow though. Operating cash flow is $3 and free cash flow $2. Compared to a 12 bucks share price, it's not terrible. They do pay a dividend right now, and earnings is on the positive side, but if you look at the average, it's actually down, and had some terrible years, of course, in the pandemic and straight after. Max is saying, like Roaring Kitty was saying, investing can be lonely. It definitely can, and that's why we wanted also to start this stream. And I'm happy I found Dane, that we are so like-minded, and that we wanted to do the same things and connected over this a bit, because that's absolutely right, Max. It can be lonely, and you know, we are a bit passionate, at least for what we are doing, but I haven't found a lot of people that share that passion in my circles around here, so it's definitely lonely at times. The value, go about 2 times a year to the cinema, normally with the kids when they have a good deal on, and kids holidays movies. Yeah, for sure. And that's a good point also, value, because at least here where I live, it's insane expensive as well. So if you take your whole family with kids and everything, you are put back a lot, like a lot of money, and I think people are avoiding it a bit, you know. So yeah, maybe not a good industry as a whole, but keep in mind though, they are also doing like hotels and resorts in the United States, so they have more legs to stand on. But I guess this is mainly known for the cinemas. So they do trade around book value, and I was like saying, in terms of the cash generation here, maybe they are fair valued here, you know. But I guess the short position tells you that they should trade lower. Margins are a little bit up in the last year, which is probably why they have finally turned things around to positive earnings, for example. And you see the debt is down, so it's not like, I don't fully understand why there's a 20% short interest here, to be honest. Revenue is up, share count is down since here, a little bit up lately. They seem to have good control of the debt. We need to check when the debt is due. Ah, hold on, I have the I don't have the most recent numbers. So this is from December 23, and I just saw here in March 28 they have spent a lot of the cash. I see, I have that, I have the number here, December 28. So my Y sheets have not updated since the last quarter report here. So okay, they've spent some cash then. So maybe the other numbers are changed a bit as well. Something to keep in mind moving forward here. So they are due in 25, which is soon. They were revolver that matures in October 2028. Okay. So they just have a little bit left there. It's like from 25 to 27 they have different deadlines on the notes. But it seems like 2025 is the first massive one. That puts me off a bit, because they spent that cash, and they need to generate that to handle the debt, actually. So maybe that's why you get this short interest. And this is updated in April as well, so maybe... Well, it hasn't gone up so far. So much, I mean. Let's see on Seeking what people are saying, though. Max is asking, where are you living, value? Okay. Well, I think I remember value where you lived, but yeah, New Zealand. I was gonna say New Zealand. Adults' tickets to the movies is about the same as an average hourly wage. Yeah. It's not good, right? It was so cool also to grow up and go to the cinema, right? So it's so good thing that you still keep take your kids though, and but it's getting expensive in general to live. Holy shit. Theater 10 still below 2019 levels. Yeah, that's what we are talking about. In summary, I believe my initial assessment of the Marcus Corporation remains accurate, as the theater business has structurally lowered profitability due to changes in consumer behavior. I believe MCS stock is more than fully valued at 43.7 times forward PE. However, balanced against MCS poor profitability is the company's underappreciated real estate assets. Unfortunately, the path to surfacing value in MCS real estate assets may be challenging given the current high interest rate environment and poor commercial real estate sentiment. I maintain my hold rating. Yeah, to be honest, I don't really. It doesn't get me excited, you know, this one. Keep in mind our improved margins, but it is debt heavy. My numbers are a bit outdated, and it's still. It's still like I want it even more cheap. And massive drop now though, and you know, last time it was here, it was in the pandemic, so it has dropped below the support level that has here around 14 bucks. So it's interesting to see if it continues to fall and stuff like that, you know. So I have added it to the database, but I'm not gonna add this to the tracker. It's we talked about the real estate assets, stuff like that, but then his thesis is that they have to sell them eventually, and I'm not gonna buy on a thesis like that, I think. Value. Local shops do school holiday deals though. $15. That all includes a kid's movie ticket, 10 worth of video games at the arcade, and a swim at local pools. All for the New Zealand $15 price, about $9 US. That's decent though. That's good. Then you also buy like a whole package. So yeah, I kind of like that value. And I used to live a bit in Australia, and I went to the cinema there, and the cinemas was pretty good there, as far as I remember, and I assume it's a bit similar in New Zealand. But I can't remember the price there. It's some years ago, but it was cheaper than in my country, and we don't even have deals like the ones you just described, value. So that deal I think is decent though. Wow, these school holidays seem pretty cheap. I don't know if we have something like that in Germany. No, same here. Same here, Max. I'm sure we have some school deals and stuff like that, but not. I haven't seen too many of the ones you describe with like a package of everything. But that's also because our cinema is isolated. You don't have these water, like the pools and stuff like that here, you know, around the cinema. So All right, I think I'm gonna end it here, guys. It's very late here where I live. I'm gonna be tired on work tomorrow. But cool. I love HDSN so far value. I have to read up on it a little bit, and I have it in my notes. I think my plan right now is to go through it more on Sunday. I like the GALP max. For me personally, a bit high in the market cap, but it looked promising with the new find and everything like that. And PBI JD, congratulations for the gain today. You know, PBI is something I've been tracking for a while, and it seems like now it's going to materialize a bit what the people involved has been waiting a little bit on. I think Boom looks a bit interesting, and we're going to continue to track it. And EAF, the same. Hertz look terrible. But something there maybe if the management can manage to turn it around, but it did look ugly. And MCS, bit boring maybe, bit if the thesis is more like a selling of the real estate stuff, I'm not buying into that. And a declining like industry with cinemas and everything, so high short position. I'm not gonna add it to track it, but I have added it to the database, so that's something. So yeah, thanks to everyone who tuned in. Really appreciate you guys using the chat. I love when you turn up and use the chat and get a conversation going. So the next stream will not be on Saturday, it will be on Sunday, where Dane and I have planned to just reflect a little bit on the interview we did with Guillermo Valles, the founder of Y-Sheets, on Saturday. We will reflect a little bit around some of the stuff that he said, I think. And then we will continue to do research. Dane texted me today and said he was paying close attention to the moves today, and that you know, we are both motivated to try to improve the performance for the portfolio for the year. So we are working hard now to find new stuff and to keep an eye on things. So you're gonna see us on Sunday do more research. Keep an eye on our X or Twitter for when on Sunday. I think maybe it would be an early one, and I know that a lot of you guys struggle to tune in then, but if you can watch the replay, that would be awesome. And yeah, I will see you all on Sunday then. And until then, enjoy the rest of the week and your weekend. And Dane and I will both be here on Sunday. So yeah, thank you, Max. Thanks for tuning in as always. Really appreciate it. And contact us on the email or on X or whatever, and we can talk a bit there too, Max. Okay, thank you. Enjoy the rest of your day and the week, and I will see you on Sunday. Bye bye.